All right, everybody, it is Wednesday, Fed Day, September 21st. So we didn't get that rally off this. I thought we'd see a sell-off on the rate hike, and then the market would bounce back up, and we started to get a bounce. But Powell just like, he came in, knocked the market right back down again. He's talking about, he wants unemployment rates got to go up 90 basis points. Like, who talks like that? Just give us a number. Like, I didn't even know what that was. 90 basis points. We're at 3.9% unemployment rate, so I guess he's talking about 4.8%. I mean, who talks like that? Unemployment. I'm an economist. I'm an economist for over 40 years. Who says the unemployment rate's got to go up 90 basis points? Just give us a number. 4.8%. So keep an eye on that, because I say, and a friend of mine raised this point with me, and I thought it was a good point. Like, what if it doesn't happen? What if it doesn't happen? So, like, we've seen, what is this, the fifth rate increase? We've seen job growth stay really strong after 4 rate hikes. This is the 5th one. To me, this is all, monetarist hysteria, the words I use: hysteria, psychosis, delusion. But if you really want to look at what is behind this weakness since, second half of August, and really a lot of it now coming in September. I mean, yesterday again, man, we had another net drain of, I think it was like 1.4 billion. It brings the total net drain for September at 146 billion. I mean, that's way more. If you go back and listen to what I was saying at the end of August, I said we'll see like 110 to 120 billion drain. We 146 billion. But yesterday was small, was like 1.3. Today was a positive flow, because we had a Social Security payment, and so that's going to give us a positive flow today of about 25 billion. We'll see the number in the daily Treasury statement tomorrow. The drains are basically done for this month. Okay, I said that yesterday, and that's one of the reasons why I thought we'd get a bounce today. But sometimes it happens the day after. Look, this was a Fed day. This is monetarist psychosis. The guy says something, and you get panic selling. I mean, we've seen this now. This is the environment we're in. This is the psychological environment we're in. I'm sure when we see the numbers tonight for the weekly AAII, the American Association of Individual Investor Sentiment Survey, we're probably going to see again like really, really elevated levels of bearish sentiment, very, very low levels of bullish sentiment. It's been like that now for 41 of the last 43 weeks. The bull-bear spread, bull minus bear spread, has been negative for 41 of the last 43 weeks. I can't remember a period that was so extended for a negative reading on that bull-bear spread. It's not necessarily a timing mechanism. It tells you the psychological condition of investors right now. They're really, really, really negative. So the market averages are approaching the June cycle lows. I mean, the Dow is closest, followed by the S&P and the NASDAQ. Whether or not it'll take it out. Look, I still think, and I have to, okay, I was looking for a bounce today. That didn't happen. But again, sometimes on these payment days, it could happen the next day. Today, obviously, a lot of a lot of selling triggered by Powell. I mean, we were up at one point briefly right after that rate hike. We had a dip, and then the market was coming back, and then you always got to be careful for that press conference, because that's when he really lays it on. And I don't, I wasn't watching it. I don't follow it. I barely even read the comments. I just saw something mentioned. Somebody sent me that thing. My friend sent me that thing about him saying he wants, the unemployment rate to go up 90 basis points. Come on. Just give us a number, man. So I don't pay attention. And as you know, I just think monetary policy is really irrelevant in the big picture. I shouldn't say it's irrelevant. It's relevant, okay? It's relevant in a way that is really contrary to the way people look at it. Here's another example today. I saw a headline saying that the rate hikes are going to add trillions to the national debt. Again, it's this lack of understanding that the rate hikes are going to add trillions to national assets. That's going to be income received by holders of government securities. I actually clipped that out. If you go to my Twitter feed, Twitter/Mike Norman, I clipped it out, and that headline, and I with a little graphics, I crossed out debt and I put in assets. Because that's what it is. I mean, if you want to have the correct understanding, the interest rate hikes, and I've been saying this over and over again, this is why I'll just say it, I'm not concerned about rate hikes, because the universal view of this is totally misinformed. I mean, I saw a guy on CNBC, what's his name? I forget his name. He's one of the anchors. I knew him when he was on Fox. He was at CNBC, then he came over to Fox, and he went back to CNBC. He said, we're going to explain to you why rate hikes are a stealth tax on everybody. And I'm like, what about savers? What about pension funds that are highly invested in U.S. government securities? I mean, it's mind-boggling the degree of misinformation that is pumped out there. And it's really just stupidity. Like somebody asked me, well, Mike, don't you think it's kind of like an agenda, like they're doing it because they want to pump out the negativity, because again, it goes to ratings and all that. I understand it from that point of view, scary news grabs people's attention, but, it goes back to an old story I used to tell about my meeting with, what's his name, who was the, David Stockman, who was the budget director for Reagan, when I met him at Fox News, And I always tell this story. You probably heard it if you've been listening to my watching my videos for any length of time. But like one time I was over at Fox News, and David Stockman came in, and we were in the green room, and he was ranting about how the Fed is gonna lose control of interest rates because we're borrowing all this money from China, and China's not gonna pay. China's not gonna buy our debt, and the interest rates are gonna go up. And I said, David, it's the Fed. They're the monopolists. They're the ones that set rates. He's like, no. And, he just wouldn't accept it. And like he went on, he did his segment, and then he left. And then like a few months later, he came back, and I saw him again. And I was like, David, I thought interest rates were going to spike up. And then he's like, well, it's the damn Fed. The Fed is the one keeping them down. And I said, well, that's not what you said last time. I said, the Fed controls interest rates. So, you catch them. The easy thing is like you catch them just contradicting themselves. I mean, it's easy. So I do not think it's like necessarily an agenda or some kind of, subversive fraud that they're trying to perpetrate. I'm talking about the media. I do think it is just complete, ignorance and a lack or, zero desire to really try to understand. And also, if they do hear, like if I were to go on there, and I remember times that I was on Fox and I would present like the rational argument or the reality of how things work. And they're like, they just don't want to hear it. They don't want to hear it. I mean, that upsets, that's cognitive dissonance. That just messes with their brains. They don't want to hear it. I mean, these rate hikes, fiscally exactly the same thing as sending out checks to people. Fiscally exactly the same thing as sending out checks to people. It may be a different cohort of recipients, but like I said yesterday in the video, it all goes into the swimming pool. So here we are, 146 billion this month has been drained. And by the way, the last 5 days alone, if you're wondering why the market is under so much pressure, just the last 5 business days, 118 billion. And like I said yesterday, some of you personally, like me personally, I felt it. I had to pay tax. I have a company, I have a business, I had to pay corporate tax. So if you're like in the same boat, you felt it too. Your balance goes down. It's no fun. Taxes are bludgeoning the economy. Now, luckily, and I say this, honestly, I mean, we're still running deficits, annual deficits, like they shrunk a lot. Last year the deficit was like, 2.9 trillion. Now, it's about 1 trillion. I mean, we're down almost 2 trillion. That's gone. That's taken away. That 2 trillion. You want to know how to, again, you want to know how the government balances its budget or fiscally prudent, as they're all talking about? They got to take that away, those dollars. 2 trillion, that's been taken away and not put back in, okay? Compared to last year. 2 trillion. And we just had another, 146 billion done this month. The month's not even over. We're the 21st. We still have 10 days, 9 days left. It's very easy to explain. Very easy to explain. And hopefully, now that you understand, or hope I'm helping you to understand, it could take some of the fear away. We have to wait until this drainage, effect that's been going on this month, it's got to stop. And as soon as it stops, and I believe that's today, and again, we'll get the numbers tomorrow, I'll be letting you know on a daily basis, okay, we filled it back up this much, we filled it back up a little bit more. We're going to get back to where we were. It's just going to take some time. I gave you the date of October 6th when I think that drain will be replaced. All of that drainage it'll be refilled back in. October 6th. I mean, who gives you actual dates? I mean, I gave you September 15th. I gave you that date back in June. Okay? And I gave you the June turnaround, back in April, May. Who does that for you? Nobody does that for you. I'm the only one who does that for you. All right? Everybody else is saying, it's the end of the world. It's the end of the world. I mean, you could, if that's your thing and if you're scared and you want to, that's up to you. I'm trying to go about this in as rational and as scientific a way as possible. All right? Emotions, I understand. We're all human. We have emotions. Sometimes it's hard to get a hold of those emotions. I mean, you see things like this. Maybe you're looking at your 401k or your portfolio, and you're like, this is horrible, this is terrible. And then you open up any media, television, internet, newspapers, and you're just bombarded with negativity. Negativity, negativity, negativity. So like, you got to be really, really strong to not let that affect you. And we're all human, it's hard. It's hard. And sometimes it just feels like the right thing to do to panic along with everybody else. Sometimes that just feels, but that's not the right thing to do. That's not the right thing to do. Okay? All right. That's it for today. Let's see what happens. Bye.